Yo, what's up? This is Adrian Castillo, and this is my channel, Daily Flows. Today I did not take a trade, but I learned a very valuable lesson. So, when there's no level of liquidity nearby for you to target, what do you aim for to take a trade? Today, I was aiming for this high because we're obviously in bullish market structure, and I figured, okay, we'll probably aim to take out this high. Now, where did I mess up? I like to start at a higher time frame and then scale down. So I would usually go into the 4 hour and mark out a nearby fair value gap, right? Well, before I even do that, I usually go into a daily, right? And if the high or the low of the previous day has been taken out, I target the opposite. So since the high was targeted, I should have focused on maybe looking for shorts. That's not what I did because of how it looks on the 4 hour. So instead of looking for shorts, I was looking for longs, and I marked out this fair value gap that I wanted us to pull back into. We're gonna go down, it's still there. Just know that when you go all the way down, the fair value gap is still there, right? Condenses down to this little spot. So where I messed up was this, right? I wanted price to pull into this area of interest and then give us a long setup to target this high, right? But this is a valid level, but it's just way too far. So what you could do instead is target your area of interest. If you already ideally know price is gonna go towards this level so that you could have your grand move up, why not just take a move into the level? If I decided to look at price like this, like, oh, we have this high and a new lower high created, we inversed this fair value gap, and then we pulled back into it, that would have been a great short opportunity into my area of interest. 78 points. So pretty much what I want you to grasp from this video is that if liquidity is too far away, then target a fair value gap. Or we could zoom out again and we could, okay, we zoomed out, right? You could target this fair value gap, or you could target an area that you think is reasonable for price to pull back to, right? So if we're in bullish market structure, you have a high, higher low, higher high. Maybe you could target this area. You could set a line right here and say, hey, maybe price wants to pull back near structure before continuing higher. You can even pull out the Fibonacci. And look, okay, it's right around that area too. Maybe you want to even tie it right here. Right around that area. It's like, alright, I should look for an opportunity aiming for the structure high. I should look for an opportunity aiming for the 50% retracement. Would have had a monster trade. But yeah, I didn't take a trade today, and I still want to post a video. So this was a little lesson I learned today, and I thought I would share it with you guys. But yeah, hopefully I catch something tomorrow, and if I do, you'll see a video on it. Peace.